All right, let's dive into the world of retirement planning. Today, we're putting two financial heavyweights in the ring, the Roth IRA and the annuity. We're going to break down exactly how they work, where they shine, and most importantly, how you can figure out which one, or maybe both, is right for you.
So let's start with a dilemma I think we can all relate to. On one hand, you want that sweet, sweet tax-free growth you hear about with things like a Roth IRA. But on the other hand, there's that little voice in the back of your head that gets nervous about market crashes and the very real possibility of outliving your savings. It's a classic tug-of-war, right? The hunger for growth versus the deep-seated need for a guarantee.
To figure this out, we've got to get to know our two main contenders, because while they're both used for retirement, they're built to do completely different jobs.
Okay, first step in the red corner, the Roth IRA. You can think of this as a special kind of investment account with a tax superpower. Here's the deal. You put in money you've already paid taxes on. In return for that, the government lets all of your investments grow, and get this, you can pull it all out in retirement completely 100% tax-free.
And in the blue corner, the annuity. Now this is a whole different animal. It's not an investment account, it's actually an insurance product. You're basically creating your own personal pension. You give an insurance company a chunk of money, and they promise to send you a check every single month for the rest of your life. It's all about creating a guaranteed income stream.
All right, introductions are over. It is time for the main event. We're going to compare these two head-to-head across 5 key areas that you absolutely need to understand before making any decisions.
First up, and this is a big one right out of the gate, let's talk about contribution limits. In other words, how much money can you even put into these things? And the rules, well, they couldn't be more different.
With a Roth IRA, the government is pretty strict. For 2025, the annual limit is $7,000. Now, if you're 50 or older, you get a little catch-up bonus, so you can put in $8,000. But that's it. These are hard and fast caps you just can't go over.
And this is where you see the huge contrast. A Roth IRA has those annual limits. Plus, if you earn too much money, you can't contribute at all. Annuities? Totally different ballgame. There are no contribution limits, no income limits. Anyone can buy one. It's a wide open field.
Okay, difference number 2, taxes. How the tax man treats your money is a massive deal. And this is another area where these two are night and day.
So here's the bottom line. With a Roth, you pay taxes now on the money before it goes in. The reward for that is you get to take it all out later completely tax-free. With an annuity, it's a pay taxes later strategy. Your money grows tax-deferred, which is great. But when you start taking payments, that money is taxed just like regular income.
All right, now for the exciting part, risk and reward. Let's talk about how these two tools approach the idea of actually growing your money, because their philosophies are completely different.
Okay, so a Roth IRA is invested in the market, stocks, bonds, whatever you choose. That means you have high growth potential, but you also take on all the market risk. Annuities, though, are a whole spectrum. You've got things like a MIGA, which is kind of like a CD from an insurance company, zero market risk, predictable return. Then there's a fixed index annuity, or FIA, which protects you from losses but caps your potential gains. And then you have variable annuities that put you right back in the market, with all the risk and all the potential reward.
And that brings us to difference number 4. And this might just be the most important one of all. The promise of a paycheck you can count on no matter what.
And it's really this simple. A Roth IRA gives you 0 income guarantees. It's a pot of money, and you're in charge of how much to take out and when. You have total flexibility. An annuity is the polar opposite. Its entire reason for existing is to provide a guaranteed, predictable income stream that you cannot outlive. It's all about security.
Finally, let's talk about liquidity. Let's say life happens and you need to get your hands on your money. How easy is it?
When it comes to accessing your cash, the Roth IRA is the clear winner. It's super liquid. You can pull out your original contributions, not the earnings, but what you put in, anytime you want, for any reason, with no taxes or penalties. Annuities, on the other hand, are long-term commitments. If you try to bail out early, you're likely going to get hit with some pretty painful surrender charges.
So after all that, contributions, taxes, risk, guarantees, liquidity, it really feels like you have to pick a side, right? But what if that's the wrong way to think about it entirely? What if the answer isn't choosing one over the other?
And this is where it gets really interesting. The whole point is that this doesn't have to be a choice. In fact, the smartest strategy might be to use both of these powerful tools together, letting each one do what it does best.
So here's what a combined strategy could look like. First, you focus on maxing out your Roth IRA every single year. You do this to get as much of that tax-free growth and flexibility as you possibly can. Then, any money you're able to save on top of that can go into an annuity. This builds your safety net, a baseline of guaranteed income to cover your essential bills in retirement.
So, at the end of the day, the real question isn't, should I get a Roth IRA or an annuity? The question you should be asking yourself is, what's the right mix for me? What balance of tax-free growth and lifetime guarantees is going to help you build the exact future you've been dreaming of? Getting that balance right, that's the real key to success.